Malcom, you actually made you kind of made a switcheroo when it comes to the cybersecurity space. You bought the BUG ETF, you sold out of the CIBR. I think a lot of people are probably asking, what's the difference? They're both cybersecurity ETFs. Why make the change?
I appreciate you framing it that way, because on its surface, you would think that, based on its mandate on the ETF, you would think that. But CIBR has gotten a little bit too overweight at everything but cybersecurity. Its #1 holding right now is Broadcom, which the last time I checked was about 10-11% weighting. It's probably massively higher than that now that the shares have popped. And #2 on that list was Cisco. So I would have to go down to the #3 holding to find the first one that's a pure play cybersecurity name. And so I just decided to sell out earlier this year, take those early wins and call it a day, and have rotated now throughout this week back into cybersecurity using BUG, because I see it as a more clean way to play the consolidation that I think is going to continue to happen in the cybersecurity space. So we've seen, the announcement of the deal with CyberArk and Palo Alto. We saw the acquisition of Wiz by Google. I think that wave is going to continue this year and into next year, and so BUG to me looks like an opportunity to play that consolidation without having to pick which will be next up on the list.
Really quick, just need a yes or no because we've got to move on. Now about 10% of this ETF is essentially Palo Alto, because it was 5% CyberArk, 5.5%, and it was already 6% Palo Alto, so 11% is just one stock. You okay with that?
It'll get rotated. Right. It'll have to get rotated out.
Coolest customer, Jim. Coolest customer.